Here are the crypto top headlines covered in this video. Ripple CEO hits back at CoinDesk criticism of stablecoin initiative. Next, Bitcoin pretty unlikely to revisit $50,000 price level, says Analyst. Also, Bitcoin halving will have to battle with weak time of year, says Coinbase. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ripple CEO hits back at CoinDesk criticism of stablecoin initiative. Ripple CEO Garlinghouse has responded to a critical piece from CoinDesk classifying Ripple's push toward exploring the stablecoin market as a desperate move. Notably, Ripple recently announced plans to launch a stablecoin on the XRP Ledger, or XRPL, and Ethereum networks later this year. However, amid the generally bullish reception to this disclosure, concerns and criticisms have also emerged. One case involved a critical report from leading crypto publisher CoinDesk. In its article, the crypto-focused media outlet claimed Ripple was failing at what it does, and the stablecoin venture was a desperate move to regain market relevance. Nonetheless, this opinion has triggered a backlash from industry leaders, including Ripple CEO Brad Garlinghouse, who sees it as a baseless attack. Garlinghouse's comment came as a reply to remarks from Artur Kirjakulov, co-founder and CEO of XP Markets. XP Markets founder bashes CoinDesk. In a recent post on X, Kirjakulov took aim at the CoinDesk article contesting the narrative presented by the publisher. He provided insights into Ripple's current standing and future prospects to counter the assertion that the company is losing relevance. Firstly, Kirjakulov addressed the claim that Ripple has struggled to secure real enterprise clients. He pointed out Ripple's extensive network of partnerships with over 300 financial institutions worldwide. This substantial backing contradicts the notion of Ripple facing significant hurdles in securing partnerships. The firm has also continued to expand into the custody and tokenization industry with the acquisitions of MATIC and Standard Custody in less than a year. The CoinDesk article also alleged that XRP is losing relevance in the market. However, in response, Kirjakulov highlighted XRP's continued prominence as one of the top cryptocurrencies by market capitalization. He emphasized its ongoing utilization in international transactions and liquidity management by various financial entities, especially within Ripple's on-demand liquidity, or ODL, service, now Ripple Payments. Kirjakulov, Ripple stablecoin venture not a desperate move. Kirjakulov also challenged the characterization of launching a stablecoin as a desperate move, comparing it to similar initiatives by other major firms like PayPal. He emphasized that such expansions are not signs of failure, but rather adaptations to the evolving crypto scene. He also addressed Ripple's legal troubles with the SEC, which CoinDesk spotlighted as one of the reasons the company is looking for a new source of revenue. Kirjakulov stressed that Ripple is not unique in facing regulatory scrutiny within the industry. He suggested that the outcome of the SEC versus Ripple legal dispute could have broader implications for crypto regulation, underscoring Ripple's significance in shaping the industry's future. Furthermore, Kirjakulov questioned the portrayal of partnership fallouts without context, noting that shifts in partnerships are common in the dynamic fintech and crypto sectors. Notably, CoinDesk had highlighted the failed partnership between Ripple and MoneyGram. Kirjakulov challenged the claim that Ripple's services, particularly RippleNet and on-demand liquidity, were losing traction. He noted that numerous financial institutions have continued to leverage the services for cross-border payments. Ripple CEO reacts. In response to Ripple CEO Brad Garlinghouse echoed Kirjakulov's sentiments, describing the piece as embarrassing for the industry. He criticized CoinDesk for allowing childish antics to overshadow its credibility as a leading source of crypto industry coverage. Garlinghouse expressed concern over the prevalence of tribalism within the blockchain community, urging unity in the face of resistance from legacy financial systems. He emphasized the need for cooperation to overcome industry challenges and drive innovation forward. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin pretty unlikely to revisit $50,000 price level, says Analyst. Bitcoin hasn't dipped below $50,000 since late February, and it appears unlikely to return to that level soon, according to crypto analyst Dylan LeClaire. The frequency of Bitcoin reaching higher support price levels, as well as the lack of immediate froth in the derivatives markets, suggests that its price is unlikely to retrace down to $50,000 anytime soon, according to a crypto analyst. Senior analyst at digital asset fund UTXO Management, Dylan LeClaire, explained in an analyst note on April 7th that if Bitcoin rises back into the $70,000 to $75,000 price range, it will put significant pressure on short positions. As we've consolidated, an increasing amount of short liquidations are building from $70,000 to $75,000, he stated. If Bitcoin's price rises to $70,000, approximately $174.17 million will be liquidated according to CoinGlass data. Should it reach the upper boundary of LeClaire's range, $75,000, around $830 million worth of short positions would face liquidation. This translates to roughly a 7.8% increase from Bitcoin's current price of $69,344. Likewise, a similar percentage change of 7.5%, but in a downward movement, occurred on March 15th, resulting in $525.2 million in liquidations. LeClaire explained, although a decline in Bitcoin's price to $50,000, a 27% decrease from its current price at the time of writing, could trigger substantial liquidation of long positions, he doesn't foresee it, considering the recent price shifts and the increasing support levels. While there is a large cluster of longs that could be taken out at around $50,000, given the structure of higher lows and the lack of immediate froth in the derivatives landscape currently, I find it pretty unlikely we revisit that level, he stated. Not impossible, of course, he warned. Bitcoin's price last dipped below $50,000 on February 13th, hitting $49,725. Just a day before, on February 12th, it reached $50,000, a level not reached since December 2021. He backed up his claims by citing the recent action by global asset manager BlackRock, which updated its Bitcoin exchange-traded fund prospectus on April 5th, adding 5 big Wall Street firms as new authorized participants. New members include ABN AMRO Clearing, Citadel Securities, Citigroup Global Markets, Goldman Sachs, and UBS Securities. Prominent crypto traders are speculating over Bitcoin's price ahead of the halving event, which is set for April 20th. This event occurs every 4 years and will cut miner block rewards by 50% from 6.25 BTC to 3.125 BTC. Cointelegraph recently reported that Bitcoin's price has risen around 658% since the last Bitcoin halving in 2020. If historical chart patterns were to repeat, Bitcoin's price would reach $434,000 $280 per coin by the 2028 halving if it performs similarly to the current cycle. Crypto trader Rect Capital believes there is considerable potential for further upward movement in the short term. He told his 443,000 followers in an April 7th post that the market is approximately 1/3 through the bull market phase. Our next top headline, Bitcoin halving will have to battle with weak time of year, says Coinbase. Coinbase explained that total crypto volumes are slowing down due to the market attempting to find the next narrative to point it higher. Many crypto traders are eyeing the Bitcoin halving event as a primary driver for a potential price spike, but the time of year will be an obstacle according to cryptocurrency exchange Coinbase. The crypto market will need to find another narrative to further push up prices across the board, Coinbase further explained in its April 5th market commentary report. The BTC halving, currently due April 20th or 21st, could be a catalyst for higher prices, but it will have to contend with what is typically a weak time of year for crypto markets and other risk assets, the exchange stated. Bitcoin has typically seen a monthly return of about 2.7% from June to September since 2011, while in the other 8 months, it averaged a return of around 19.3%, according to data from the digital assets research firm Brave New Coin. Meanwhile, Coinbase further noted that overall crypto volumes have also continued to slow as the market tries to find the next narrative to point it higher. Over the last 24 hours, the total crypto volume was $61.78 billion, a 33.25% decrease from the previous day, according to CoinMarketCap data. However, the crypto exchange sees signs pointing toward the likelihood of an increase in new investors entering the crypto market in the near future. In our view, Bitcoin's increased acceptance as a form of digital gold could enable demand from a new subset of investors in this market regimen. Bitcoin's dominance in the overall crypto market is 50.6% according to CoinStats data, which is the market capitalization of Bitcoin relative to the overall crypto market. Furthermore, the report explained that those awaiting price declines to invest may find the troughs to be less and less as more investors get involved. As a result, we think dips are likely to be more aggressively bought compared to previous cycles, even as volatility persists during price discovery, Coinbase wrote. Halving events have frequently been associated with spikes in the price of Bitcoin. Following the previous halving event in May 2020, Bitcoin's price surged, starting at $8,787 during the halving. The cryptocurrency rallied, reaching nearly $69,000 in November 2021. On April 6th, Cointelegraph reported that the United States Court of Appeals for the Second Circuit ruled in favor of Coinbase, confirming that the secondary sales of cryptocurrencies on its platform do not violate the Securities Exchange Act. The plaintiffs contended that Coinbase was offering and selling unregistered securities. Furthermore, they accused the exchange of violating various provisions of securities laws. However, Coinbase argued that secondary crypto asset sales didn't meet securities transaction criteria, disputing the relevance of securities regulations. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.